You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with us once again. Yes, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old Options Insider Radio Network. If I sound back to my old self, it's because we're back in the scenic studio here in scenic Chicago, really. The studio's nice, too. Going to be adding some new signage from the conference in a little bit. Of course, we were down to the big options industry conference pretty much for the bulk of last week. If you've been paying attention to the network, you've seen some of the audio already hitting it. I sat down with pretty much everybody, who's who, easy for me to say, of the world of options, and it's all going to be hitting the network, so you can subscribe to our interview show if you want that, or you can just get the special events, which will be there, or of course, just stay tuned. If you have the full network feed, you're going to get it all coming your way pretty soon as well. Also got the panel audio coming your way from OIC, which is fun. That's pretty much exclusive to us. That's a great little gift for you guys. You don't have to spend the thousands of dollars to go down there and check it all out. It comes to you for free, gratis, courtesy of the folks over there at OIC who just want to get the word out amongst you folks out there. Stay tuned for that. We're still waiting for some final approvals on all the panelists to sign off on their audio. Then we're good to go there. You can find that, of course, on the mothership, theoptionsinsider.com. And because we're back in the studio, it means we're back live on Mixlr. You can join us on Option Block Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We tried to get you some live hits from down at the conference. I'm not sure. I haven't listened to myself. I'm not sure how well those live audio bits came out. They could have been kind of faint. We had to kind of make do with our environments down there and the connectivity we had down there. So it's kind of a secondary thing. Hopefully some of you who like that stuff had something to sink your teeth into. If not, the full interviews will be hitting the podcast network forthwith. So stay tuned for those if you missed them. And of course, however you listen, hit us up. Questions, comments, insights. Maybe you have somebody you want us to bring on the network that somehow we haven't done yet. Well, let us know. Hit us up. We do like to hear from you guys. And I'm back, listeners, which means everybody's got to come back to work. The vacation is over. Red Rover, vacation is over. Let's spin the wheel, see who we got joining us back for this first work day of the week. Oh, of course, we got Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. What did you do? How did you spend your option block vacation, sir?
Oh, my goodness. I don't even know. I mean, I was just in such a great depression from not being able to view the option or be on the option block. I just kind of sat in a corner and I just cried.
I heard a rumor that you were studio adjacent while we were gone. Is that the case, sir?
Yeah, I just had, I'm part of the, there's like this retired NFL player thing, and we had a meeting near the studio at the, actually right after when we would have recorded the option block. So I was excited. I was going to make an in-person appearance, but on the show before I went to the meeting, and but it just wasn't meant to be, I guess.
The volatility gods, the option gods, they said nay to that, so that would be too well timed. But if you ever come back downtown from the hinterlands of St. Charles, you know where to find us. The rest of you, it is a closely guarded secret. Do not come by. Just kidding. All right, if you can find us, we'll see what we can do. All right, and last but not least, he's been here once or twice. He's enjoyed the delicious beverages we have on hand in the studio. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How did you spend your fun option block vacation, sir?
What the heck did I do? I wrestled trying to get a dock in the water. That's what I tried to do. And I took Friday off. To go on a little trip, short trip, but that was my excitement. I made Mark hold down the fort. And he did an admirable job.
So you took your local doctor and you threw him into the ocean. That's how you celebrated your option block vacation?
Exactly. I took him and I chucked him in. No, I have to do a little wrestling because I got to get this. I have to get the dock over a cliff, but it worked. It slid down the ramp, and there was no children were injured in the whole activity, which is good.
The great dock installation of 2018. All right, with the team assembled and pretty much installed, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome back to the Trading Block. This is indeed the portion of the program where we break down what the heck was going on in today's market activity. Most of the major indices have an interesting day. They were mostly green on the day with some nice rallies happening for a little while there in a lot of the major indices before giving it up. The S&P getting up to about 2683 on the day before closing. A bit shy of that, around 2670 and change or so. And the similar story for most of the other indices. The Dow and the S&P closing up about 0.3%, somewhere in that range. And the tech-heavy NASDAQ leading the charge up about 0.75% or so. And all that up and down, kind of rallying and giving back some of the rally, but still never selling off, really. Meant the VIX was kind of mixed, holding the day. Let's see, how low do we get intraday on yield? Got down about 14.5. Got up to as high as about 15.5, so about a full handle range up there in the old VIX cash, settling off near the downside of that, right around 1478 or so in VIX cash land. So a lot of interesting stuff to break down. It's been a while since we've done this, guys, so hopefully you recall how it goes. Let's spin the wheel. Let's start with Uncle Mike. Uncle Mike, sir, what was catching your eye in today's boisterous market activity?
I forgot how it goes, Mark. What do I need to do? No, just kidding. In looking at it, I would say that we were about where we started as to where we ended. So during the day, we were pretty much range bound the entire day. Of course, probably around maybe 1:30 Chicago time, we hit our highs a little bit above a range. And then maybe around 2:30 Chicago time, we went below the range a little bit. But then we ended up closing towards the bottom of the range. We did gap up. So for the most part, it really didn't. Most of the movement in actual markets really didn't happen today. It all happened last night in the futures or in the 24 hours trading of SPY, whatever way with which you want to go with it. So on there today, we really didn't have, I can't say it was the most exciting of days, but it was an up day. So can't complain about that. Overall, across the board, most of the sectors were pretty much, there really isn't anything really sticking out that much. I think consumer staples were down. And I'm looking at XLP, of course, and consumer discretionaries were behind the pack a little bit, but as was energy a little bit, but for the most part, technology, industrials, financials, it was about in line with each other in terms of the percent gain on the day. So we really didn't have a ton of things happening that were really like sticking out as to where we were going. I think the big story, at least of today, would be the last 2 days of last week. I had all this bull market and nobody to share it with on Thursday and Friday of last week. So Thursday, of course, we had quite a downturn in the marketplace in that at first. And that markets really had quite a big sell-off. And then during the day, we ended up finishing slightly higher on the day. We went below the 260 mark in SPY, and then finished slightly higher on the day on Thursday. Then Friday, it looked like we didn't quite get that Goldilocks number for the unemployment, in that it seemed like we did, but it seemed like the market didn't quite like it at first. But then once the market opened, the bulls were definitely in charge on Friday, and that the job number was not quite as high as I guess people were expecting. but the unemployment rate was showing 3.9%, which was the lowest unemployment rate since, I believe, if I remember correctly from Friday, it's such old news now, of course. If I remember correctly from Friday, it's the lowest since December of 2000. And then with that, the market was just off to the races on Friday. We went back to being positive on the year, which I think is a very key technical point. And then, of course, today, we just had a little bit of a gap up going into today. A little bit of action throughout the day, but really not a lot. Curious to see in the upcoming days as to how the market will react to being positive on the year. Will it stay positive on the year? Because overall, we are in kind of the low end of the range right now. Are we going to get a little bit of momentum going upward, or are we just going to kind of maybe use this as a point of resistance? So much excitement, I can barely bear it, Mark.
It is a lot of excitement. You have to try to contain yourself, sir, while we toss it on over to the Rock Lobster, who's busy just cleaning himself off from throwing his poor pediatrician into the ocean. Mr. Rock Lobster, what was catching your eye in today's activity, sir?
I think, if I'm not mistaken, when was the last time we closed below 14 in VIX this year? I mean, in 2018.
It has been some time.
I'm sorry, closed below 15. Below 15. We actually had, the weekend markup went away, and I'm going to say over the last 6 months, we have had it infrequently. We have had, I'm looking at it, maybe one close since I think we've had one close below 15 since.
On the 17th, we closed at 15 and a quarter and got as low as about 14.57 intraday.
And I think our lowest close was 14.64 was on the 9th. Then everything ripped again. And so I think we've only had one this actual close where the close stuck. If you look at VIX, we have been pinned to 16 for about 2 weeks, almost 3 weeks. So I think going to kind of Mike's point there, tech earnings, pretty good. Apple, all-time highs. Looking for more, growing chip earnings. So we have all of that. I know we'll save Tesla for the odd block. But, I mean, the thing is, it's one of those things where everybody's posting now. We haven't had, unemployment this good since middle of 2000, and we, they're showing like, okay, well, all the stats from basically the middle of 2000 before we had the whole tech crash, remember the .com explosion. So it hasn't been this good since the .com explosion. So, but the Qs, they're not at their all-time highs, but they're definitely on the high end of the range. The multiples don't look anything like they did then, maybe say for Amazon or Netflix, but stocks like Apple, Microsoft, Intel, they're all they're healthy multiples, but definitely not insane multiples considering all the cash they're sitting on and generating. So I think this is one of those things where banks are at a level they haven't been in quite a while as well. I mean, not at the highs they were last going into this whole tax thing, but it seems like right now there might be a little bit of a fear of there's kind of that good economic news is we can't see anything great coming. So this is about the top and we're going to call the top and everybody's going to get sad about it. So, I mean, most of all this trade war stuff seems to be kind of petering out. Last year, North Korea was kind of a story. Now, apparently they're going to go come to the bargaining table. So, like anything can upset this market considering the tweets that come out of the White House. Doesn't take very much, but I just think the market is right now, it is afraid of all the good economic news that's been around it and doesn't quite know how to deal with it. So I think psychologically, like the volatility, VIX being able to trade below 14 and stay in the 13 handle, I think would be kind of a big barrier for us to get through. And some couple of more decent earnings calls, and we could certainly get down there again. So it looks like almost for one part of the day, SPX looks like it was try to go red, but it didn't happen. So again, I just think the market's still afraid of the good news, and doesn't know where any more good news can come from. And I think that's maybe it's suffering from bad press at this point. Let's call it that. Just bad press.
A lot of bad press. Yeah, this is our third close sub 15 post February 5th, of course. You got to bear that in mind. Pre February 5th, listeners, it was a little bit of a different market. We were trading in a 9 handle back when we kicked off the year. So a little bit of a different volatility regime, of course. February 5th kicked it all back into high gear. But you take away this Friday, which kind of was that one was there was some crazy stuff going on. Got down to 1091 low on this Friday. We saw some weird aberrations lighting it up this Friday. Outside of that, it was pretty much only March 9th where we closed below 15. Other than that, it's been pretty much smooth sailing. Speaking of smooth sailing, the numbers coming out here for April for the entire options industry, and pretty good. Yet another good month. In fact, it was a markedly different tone at the options industry conference this year. A year ago, it was kind of dire. There was volatility, as you guys know, was pretty much in the toilet. Volume, commensurately, was in the toilet. Everyone was kind of worried about the future of the business. Fast forward a year, vol is back aggressively. Volume back aggressively. I think up for the year, we're pushing 30% increase year over year, year to date so far. Obviously, that's not going to stay, but still, good numbers coming out of the OCC to confirm that here. And that put a smile on a lot of people's faces down there in the OIC conference. Year to date, ADV for cleared volume at OCC, our friends over there, the Options Clearing Corp, up 29% from this time last year, with about 22 million contracts and change, compared to about 17 million this time last year. Let's dig a little deeper. Exchange listed options volume hit 398.5 million contracts in April. That's up 29% from a year ago. Drilling down a little bit farther, equity options volume hitting a total of 356 million contracts. That's a 32% increase from a year ago. Drill down a little further, the cleared ETF options volume, 164.5 million contracts, a 27% increase from April of last year. Index options volume, interesting, this is kind of the lone kind of laggard here, up only 5% with about 42.3 million contracts. So you'd think all this movement in the S&P, all this movement in the indices would get a lot of that stuff, and yet only 5%. Also worth noting, they clear futures over there at OCC now, primarily VIX futures and SIBO Bitcoin futures. So you'd think they'd be up with the addition of a new product, yet cleared futures from the OCC hit about 7.4 million contracts in April, down 32% from April of 2017. Year-to-date cleared futures ADV is 6% off 2017. So maybe some of this talk of the demise of these ETPs that were slinging a lot of futures and they're rebalancing and adjusting, perhaps there's something to that. So, Mr. Rock Lobster, first off, what are your thoughts here on these overall numbers? Are you surprised by kind of just the explosion of options volume that exists out there? And then B, maybe the little asterisk here, futures down 32% from a year ago. Does that also surprise you, sir? The lion's share of that being, of course, VIX futures.
Well, don't you think the death of XIV has something to do with it, and cutting UVXY in half and cutting SVXY? Just
exactly.
I think that was that trade. I mean, I'm a friend of mine runs a Facebook chat room for volatility, worth checking out. Dave Lincoln Bechtold, and I'm seeing a lot of everybody's like waiting for the contango, the 2017 contango trade to come back, and it was a fantastic opportunity at the time, but you aren't going to see a whole lot of years when you have multiple prints of the 9-handle closing in VIX on I don't know how many occasions we had. So, and I think that was a record low vol, right? So, and we killed like the how big was XIV at the top and SVXY? The market cap of those things are pretty big. So, it does not surprise me that the future volume is down. It kind of saddens me that those kind of leveraged products are gone, because they were fun. But you have to understand them, but they were still fun. And I miss the pop you would get from SVXY when the vol, was crashing. It was a cool product. I mean, it was fraught with danger, Will Rogers, but it was one of the few things you could reliably buy calls in, and you really could get some performance out of it and stuff. But it, and I think it died. Now the fact that options are back and the market's still kind of close to all-time highs. You still have stocks like Netflix and Amazon and Apple that are just, that are knocking the stuffing off earnings, and those stocks have huge moves, and that's the kind of stuff that brings people into the option market. So the fact that the market's moving brings option traders in, but the fact that they killed all the fun VIX future products and really didn't tell anybody until after the fact, you already know that I'm a little grumpy about that. But I think those are the two big reasons. But I would expect even option volume to keep going up this year, to be honest. Just because I think the penetration of options in general just every year just gets a little bigger and a little bigger, and it's only a fraction of really the investing public really has any clue about them. So I think it's still kind of in growth mode, and as long as you get any kind of green in SPX, it will still be in growth mode. Options level bull markets. Somebody I know said that, but I don't know who it was.
Some very, 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 very savvy gentlemen. People like to play names like SIBO and others to play on this rising options tide. Yet, of course, we all know SIBO getting clipped a little bit, having earnings on Friday. They got as high back before the madness of about 136, 136. Actually, they got a little higher than that. They got about almost 138 back in January, and of course they're off about a third from there now, right around the 100, around 103 today to close out. Of course, all this talk of the additional investigations not helping, even though at the end of the day that kind of thing really is a good thing to shed some transparency, shed some sunlight into exactly what's going on there once and for all. I think is probably the best thing, because the worst thing you want to have for anybody, for the SIBO, for the traders, is to have a product swirling with some controversy around it. So get in there, shine the light on it, figure it out once and for all, explain it to the masses in a way they can actually understand, and I think it'll be an interesting thing. Speaking of interesting, I want to talk about the Options Industry Conference, but we're kind of running up against it, so maybe we'll table that for for Thursday's show, as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Let's get to it. It is time for the Odd Block, the weird, the wild, the wondrous, the head-scratching portion of the show, where we break down the paper that is catching our eye. It's here. It's back, listeners. You guys were waiting. You guys were hoping for that moment when Tesla got back over 300. It kind of flirted with it a little bit last week, getting over there, getting about almost 307 on the 2nd, of course, last week. And then kind of taking it on the chin yet again, getting down to 275. Today, again, rallying a nice 3%, closing just shy of 303 up there today. So well back north of that 300 level that I know all of you pay so much attention to. What we pay attention to here, though, on the old Options Insider Radio Network and indeed on the website, are these crazy, funky, super mystery, out-of-the-money head-scratching puts. And yes, they continue to trade even on miraculous up days in Tesla, to the tune of, let's start off with our old friends, the ones you guys voted as having, actually no, the second, these came in second on our poll. You guys voted the VXX 10 puts first, but the number 2 that came in on our poll for the best chance of making some actual money on them were the Jan 2019 50 puts, another 583 hitting the tape. These things are just printing contracts, and now it's really off to the races. A whopping 55,000 OI on the tape. That's increased about 10% just in the last few weeks. So if you're wondering if these things trading, yes, they are. They're down to about $1.25 now, listeners. So they got up as high as nearly $3. They were hovering around $1.50 for quite a while there. Now they're coming off a little bit again. So who knows? Maybe this is bargain time, even though if you've been paying attention to us here on these, these things we're trading well shy of that not too long ago, 50 odd cents. So yeah, this recent run up has been impressive. Also impressive, nearly 1,800 and change of the Jan 2019 20 puts hitting the tape already, almost 7,000 open on that strike, listeners. So people continue to trade these far out of the money Tesla puts. Let's scroll down out really quick. Oh, we got AUG. AUG coming up here in Tesla as well. AUG 2019, which also nobody wants to play in except for some really funky in the money stuff. But aside from that, let's go all the way out to the Jan 2020 20 puts. Again, easy for me to say. Almost 200 hitting the tape today. Nearly 6,000 open on the strike. Looks like actually a vertical, maybe. Similar numbers going up of the Jan 2020 30 and 20 puts. So maybe a little bit of a 10-handle vertical going up there. Looks like you can get it done, for about 70 odd cents if you were so inclined out there. Also about 170 of the par puts and 264 of the 50 puts going up in Jan 2020 as well. Pushing, let's see, about 13,500 or so open right now. So we're getting close to the 14,000 level on those 2020 50 puts as well. Mr. Rock Lobster, how many of these can be traced back to Carmen line today, sir?
I like to say that we dominated the open interest in the Tesla out of the money puts, but we did not. We were VXXing today. I have to say we were not Teslaing. But do you find the bounce? I mean, this stock bounced like a rubber biscuit after that kind of, basically Elon Musk says, I don't want to talk to you guys anymore about our funding needs or our timetables for delivering cars or any of that analyst stuff. You guys, all those questions are boring to me. I want to talk about new stuff. And the market totally shrugged all of that off. I'm a little blown away by it, I have to admit. So
I think he also mentioned he's buying some stock, right? I think
there's a reason why people keep buying these puts.
Didn't he say he's also buying some stock too, which tends to help? I saw some notice about that. I didn't see the exact amount, but picking up a little bit more, maybe not a ton, but I guess just trying to reassure the naysayers out there. Look, my money is on the line just like yours. I'm sleeping on the factory floor. It's crazy business over here in Tesla land. Speaking of crazy business, those puts indeed are crazy business. Let's move on to some other interesting stuff. Got some furious paper going up here today in Coty Inc. C-O-T-Y. This is a beauty company. They operate in 4 segments: fragrances, color, cosmetics, and skin and body care. Oh, and also Brazil acquisition. I guess that would make 5. They don't really, I guess they can't do math very well here at Coty. But what they can do, at least someone out there, is sling some craziness in Coty. This is the name that averages shy of 3,000 contracts a day, doing 51,000 and change. A pretty equal, about 1.2 to 1 calls over puts. That's because the big trade we saw going up out here today involved both sides of the option chain, listeners. It was out in August. It was the AUG 1418. Looks like a bullish risk reversal going up on a bit of a ratio. Saw some people writing up earlier in the day about just the AUG 18 calls alone, but it was clearly linked. There's some puts going up here as well. First off, about 20,000 of the AUG 18 calls hitting the tape out there today, all on pretty much no open interest. So clearly opening paper, actually almost 21,000 contracts. So the numbers continue to pile in throughout the day. Looks like including a big block of about 14,000 of that going up as part of a spread for 54 cents. That 14,000 looks like it going up against 14,000 of the AUG 14 puts, doing those for about 40 cents. So doing that bullish risk reversal, 4-handle risk reversal for about a net 14-cent debit. Total of nearly 15,000 hitting the AUG 14 puts as well. So clearly more volume trickling in after the fact. And it also looks like more calls went up. So maybe someone got inspired by that trade and said, I want to do some of these calls. Or perhaps our friend decided, you know what, I want to do it on a bit of a ratio, in which case, obviously, those prices are a little bit different net on the spread, but still has all the feels, to use a technical term, has all the feels of a nice bullish risk reversal. Let's check in here and see how our friend Coty has been faring. See if this bullish risk reversal on these strikes makes some sense. Kicked off the year ago right around the 18 handle. And this thing had some troubles, got as low as about 14 and about 14 and a half. So those strikes starting to make a little bit more sense now. And then hitting rally ho mode up to about 21 and a half back in February. So it's kind of been all over the place. Now it's kind of pushing towards the lower end of that range again. So our friend here deciding, if I got to pick up some shares at the 14 handle, it's not the worst thing. And if this thing perhaps turns around I'm liking myself some upside. So much so I'm going to do it on a ratio. Mr. Rock Lobster, kick us off. I know you like bullish risk reversals in spirit, in theory. I know that in practice you have a hard time paying that debit. So what do you think about this one here, sir?
I do not like paying the debit. I have to agree with you on that. I want my bullish risk reversal for a credit. This one is interesting because this Coty, I believe, this company's owned by kind of a wealthy family. And they just took it public a few years ago. I remember they were trying to buy Avon or something. Very interesting, vol jumping. I guess earnings are coming out here really soon. I think somebody's looking for a bit of a home run ski on this one for low dollars. So it has all the look, they want a little time. I think somebody's throwing down some pretty good money on earnings spec here. Like kind of not really worried about taking the stock at 14, but looking for a big home run. That's what it does feel like.
Yeah, especially with the additional piling in on the upside calls there, the AUG 18s. It does seem like they're looking for a nice pop to the upside. You guys can take a look and see what you think for yourself there, and if perhaps you like what is being caused as a result out there as we keep on moving into what we got next here. We got Marathon, our old friend Marathon Oil, ticker symbol MRO, closing today, 1977, an excellent year, only up about a nickel on the day today. This is the name that does about pretty decent paper, nearly 13,000 contracts a day. Today doing 55,000, about 5-to-1 calls over puts. A good chunk of that coming in. Looks like it might have been a roll. It's kind of interesting. Some of that we'll have to see and dig in a little bit more there on those 20s. But we did see a lot of upside, or actually at the money and near upside call paper here in MRO. Saw about started off at the time about 8,000, now close to 10,000 of the May 20s going up intraday on a lot of different prices. Looks like a good chunk of them going up around 50 cents, 49 cents in that range. They went out 46 and 48. About 12,000 are open, actually about 11,000 open on the strike. So it looks like it potentially has the possibility of being closing. And then we saw a lot more paper going up. 13,000 earlier in the day, total of about 16,000 and change going up on the May 21 half calls, including us about 5,000, a big block about 5,000 going up for about 32 cents. It looks like a lot of this may be indeed rolling from the 20s up to the 21 halves. If it is, which wouldn't be the craziest thing. Typically when we see rolling like this, if it is indeed the case of rolling, we see more size on the secondary leg there. Good sign that you're seeing perhaps a bit of a house money roll, and the fact that we're pushing that 20 strike could perhaps indicate that as well, those 20 calls threatening to become in the money. When we see these rolls, though, usually we see somebody going up and out, give themselves a little bit more time. Very rarely do we see just straight up, which is interesting, going up. I'm going to buy another strike and a half, and looks like doing that for the 21 halves for 32 cents, which was a pretty decent print because they went out 13 cents. So I'll have to dig around into that as well. But interesting stuff here across the board. Just a lot of paper going up at MRO today. We see a ton of 1,000 of the May on the weeklies expiring the 25th, 21 halves going up as well. Lots of action out here in MRO. Kind of just a big day. They just had earnings. What was it on? Looks like the 3rd here. So the stock's kind of been off to the races ever since. Let's pull up the chart and see exactly. We talked about MRO before here on the old show. About a year ago, they were about 5 handles shy of where they are right now, right around 14 and a half. They got down as low throughout the year as about 10 and a half or so. And we're pretty much at the apex of the past year right now, hovering right around the 20 handle out here. Mr. Rock Lobster MRO kind of gapping around. Yeah, had a big range today. Got down. The low is pretty much where it closed, right around 1977 or so. The high was nearly 21, so a good range. Hence, probably some of those funky prints on the calls. What say you, sir, about this? If it is indeed house money rolling to the upside and doing a little bit more on the upper leg, I know you're usually like to see the people getting a little bit more time with that. So, what do you think about someone going up and not out, just going straight up and doing more size?
I think they made a lot of money on the 20s, from just looking where it was trading in the list, just slightly below 18, only like less than a week ago. So I thought that, number one. So I think they got about $1 for those when the stock was maybe about 70 cents higher today at some point. So the timing was great, and they want to be really long. The oils are I'm looking for some cheap vol now. And a lot of the oil companies, just because I don't think the oil stock prices have kept up with oil prices very well. They've all kind of lagging. And they're starting to pop now a little bit, but it wouldn't be surprising to me if we saw, some consolidation. I mean, I think MRO is an exception because it's been doing pretty well as the price of oil has gotten higher. Exxon, not so much. Some of the smaller players, not so much. I guess depends on what their balance sheets and everything look like. But I think this is my closet play for 2018. I guess it's out of the closet now, but easily I could see these stocks going higher, or there be a little bit more consolidation in this industry. So that would not surprise me. And Marathon is kind of a mid-sized player, so what the heck? But why you would roll those up with a week to go, I have no clue. I mean, you want to stay long, I see that, but man, you're running out of time.
Yeah, give yourself a little bit more time. You got that much money to burn. Buy yourself, an extra week or two. You don't have to go crazy. For our friend the Flowmaster chiming in here. I had a good chat with him, by the way, at the Options Industry Conference. Look for it. Might actually be on the network already as we speak. He's confirming that it is indeed a roll. It says they opened the 20s last week with the stock around 19 and a half. So a little bit interesting. And they paid 32 cents for the 20s last week. Sold it for $1.03 today. So there you go. Had all the whiff of a roll about it, and it was indeed the case. All that stuff. It's fascinating to watch. A little bit of house money, and they're putting it back to work, buying more, if not more time at the same time. And if that's all, that's all too rich for my blood. Where's my cheapy biotech of the week? We got you covered. Not quite as cheap as usual. Not in the $3 to $5 range. Can you handle 14 and a half? Because that's what we got for you today. It's Amicus Therapeutics Inc. Ticker symbol FOLD. I like that ticker. Closing today right around 1460, 1459, up about 2.5% here on the day. This is the name that does about 3,500 contracts a day, so not bad for your resident cheapy biotech. Today doing about 10x that, about 32,500 contracts, 12.5 to 1 calls over puts, and a lot of paper going up here on the tape. Near-term stuff and far longer term as well. Worth noting, they do have earnings before the open tomorrow. So a lot of earnings-driven paper here in the front couple of contracts. See some 1,000 lots going up on put spreads and whatnot. Also saw the May 15 calls going up about 3,000 times. Good chunk of them hitting the tape, about 1,000 for $1. But that's not what was driving our interest. No, let's go a little bit farther out. Not quite straight up earnings paper, because it has a few other months, baked in there as well. But we did see what looks like a vertical going up in July, the July 16/22 call spread going up 8,467 times. Looks like paper doing that for about $1.70, $2 on the 16s, 30 cents on the 22. Seems like they are buying that spread there. Looks like also worth noting there is some size paper open on the 16s to the tune of about 15,000 and change out there. So interesting stuff nonetheless out here as well. Also worth noting there was a bit of a June leg going up there as well, with the June 17s going up 8,467 times as well. So it was actually more of a three-legged bad boy here. Our initial analysis showed it being two legs, but lest we missed the third leg in June's. The June 17s, 85 cents, 8,467 times. Let's just see quickly. Actually, also size open on the June. So it looks like perhaps a bit of some rolling. All sorts of funky paper out here in Fold, which is kind of what you expect when you're talking funky biotechs, Mr. Rock Lobster. Not liking that name, Fold, at all. Let's go pull up a chart here really quickly and see what's been going on here in good old Fold. Yeah, about a year ago in May, it was $6 and change. It hit the number of the beast, 666, back a year ago. These days, it has more than doubled. Actually got as high as about 17 and change back in the hot and heavy January period of this year before, as we all know, February changed the narrative for everything. But hovering still well over 2x where it was about a year ago. Mr. Rock Lobster, earnings tomorrow here in Fold. We got a July vertical. Looks like maybe a bit of a roll as well from June as well. So a June leg lurking in there. All sorts of funky paper. May 15's lighting it up today. Just paper palooza. Near at the money calls, verticals. Take your pick. What's catching your eye out here? What's your spidey sense telling you about all this paper palooza here in Fold? Aside from your love of the name, of course.
Does it feel like it's a bunch of closing action? Like somebody, I'm still trying to figure out like the funky spread nature. A lot of weird. It's kind of like closing and rolling up. Because the stock was, well, I guess a year ago it was 13. I mean, maybe they're taking a little. I don't see how they could have made a lot of money on those options unless they bought them, a long time ago. So that's a curious one to me. Like they're dumping some volume and just moving to total spec on the upside. That's it kind of seems like that, but then at 30 cents, it feels like they're just riding the call. So, is it I guess a kind of like a buy right roll, and I don't know why you would write premium on a biotech like that. But so I don't know. There's a lot of, I have to say there's some conflicting stuff going on in this one. It does feel like they're rolling to a higher strike for a right, but for 30 cents, I mean, that's 30 cents and that's fine. But I'm getting a lot of conflicting ideas on this one, to be honest, I guess.
I think
not quite.
There's a lot of conflicting signals here. Maybe we need to dial this one in and really maybe debate it again some more on Thursday. We can keep going with this one, but I know Uncle Mike is champing at the bit in the wings there, listeners, to get at you here for his Monday bit, his Monday dose of strategies. I'm going to mark this one as to be watched. I'm kind of intrigued by that June leg as well. And perhaps after the show, I shall dive in myself. Let's see. Maybe I'll even use Mr. Schwartz's system, if it's working. The trade alert there while we keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. Yeah, I'm with you, Mr. Rock Lobster. It does seem like they decided to stretching the better part of valor there in June, and then deciding not just let's forget straight up calls again in July, and instead just do a nice little vertical. Put that 30 cents back in your pocket where it belongs. Because let's be realistic. Beyond 22, kind of crazy, but then again, we've seen crazier things out of biotechs, including crazy things. It's Monday. It's time for some strategery. It's time for Uncle Mike to go crazy. This is actually a good one for Uncle Mike. So we were kind of just talking about, is it a calendar? Is it a diagonal? What is this trade? A perfect segue for Uncle Mike, sir. I have a feeling you may want to weigh in on these crazy things called diagonals and calendars, sir.
Calendars and diagonals. It's a crazy thing to say the least. I'm willing to bet that your birdies had quite the time discussing such things, and hopefully they didn't fall over when they were actually telling you what was going on today.
Yeah, they were gorging on bird feed while I was gone, sir. So it was not a pretty sight when we got back. I had to kind of prod them a little bit. They're a little lethargic today, but they're waking up now.
Oh, my goodness. Good thing I'm not talking about straddles and strangles today. But anyway, with that being said, volatility is moving right now, as Andrew had talked about. We are down around the 15 level again in the VIX. And I want to go over some some thoughts in terms of when it might be better to go the vertical route and when it might be better to go the diagonal/calendar route. First off, when is volatility high and when is volatility low? Well, some say when the VIX is at 30, it's high, and some say when it's at 20, it's high. Some say when it's at 15, it's low. Some say when it's at 10, it's low. Here's the bottom line, folks. Volatility is high if you believe it's high. Volatility is low if you believe it is low. Now, with that being said, can you be wrong? Good gosh, yes. There's plenty of people that probably felt that the VIX in the low 20s was really at a high level in early February. Well, it ended up going up past 50 for a little bit. So you never know. But my point is there's no set number as to when vol is high and when vol is low. Now, when is it better to do a vertical and when is it better to do a calendar/diagonal? That's what I want to discuss today because we're coming back to a point to where, well, as Andrew even mentioned, we did close below the 15 level today, and it seems to have been a kind of a level of support for the VIX recently. And let's see, I wanted to give you some of my thoughts on it. Now, I believe that a vertical, if you're going to choose, let's just assume for a second that you're bullish on a stock. And you have two choices. XYZ stock is at $50 a share. You can either choice one, buy a 2-month 50-55 call spread, all in the same month of expiration, or choice two, maybe buy a 2-month 50 call and then maybe sell a 1 week or a 2 week 55 short call. Now, the diagonal spread, the second thing that I had mentioned, is going to cost more money because you're not going to get as much premium in. But with that being said, your obligation is for a shorter period of time. So in theory, let's say that we knew the market was going to go up to right below where that short call was, then I think that the diagonal would be better because you can sell the near-term premium and continue to collect month or week after week after week until the spread either pays for itself or you have just a nice little source of income going there. However, we don't live in a world of certainty like that. And I want to give you the idea of when one might be a better idea than the other from the perspective of implied volatility. Let's say that implied volatility is high. And by high, I mean you believe it's high. And let's also assume that the market just doesn't move. Just for a second, and obviously if volatility, the market's going to move most likely, but let's just assume it doesn't, and let's just assume that volatility is just in a vacuum here so we can kind of understand this concept. So with that, let's say that we buy a vertical, and volatility goes down in value. A vertical will be better than a diagonal, and here's why. Let's say that volatility goes lower in value, then with a vertical, you actually have that premium locked in. You will have taken in more premium for the 2-month 55 call than you would have for the 2-week 55 call. So let's just do an extreme example. If volatility went to 0 and all months it went to 0, then you would have captured more short premium from doing the longer term vertical than you would have the near-term diagonal. Now, here's the other problem, is that let's say that vol goes down just a little bit. Well, you're hoping that vol stays at similar levels because after that 2-week call expires, you want to do the same thing for the next 2 weeks. Well, if vol goes down significantly, you won't be able to do it because of the fact that you don't have the premium there anymore. So with that being said, if you believe that volatility is high and you believe that volatility could come down lower, in theory, most of the time, you're going to be better off using a vertical spread. Now, you might say, well, but Mike, I don't know if I like doing that. I like being a little bit more active with my trading, so that's why maybe a diagonal is better for me, even if I believe that vol is high. I would still like a vertical better. And if you are that active kind of guy or girl, then I would recommend just maybe trying to trade in and out of the short call on the vertical. That might be something to consider as opposed to a diagonal, because you can control when you get in and get out. You're not able to control what volatility in the whole market actually does, unless you're a multi-trillion-dollar trader, but so you never know. Now, let's say you believe that volatility is low and is going to go higher. Once again, let's not take into effect all of the other factors of option pricing. Let's just look at volatility in a vacuum. If vol is low and you believe it's going to go higher, then if vol is in a vacuum, and that's the only thing that's going to affect the factor of this spread, then you're better off doing the diagonal or the calendar. Reason is such. The amount of premium that you're going to take in the following month or 2-week period or whatever time frame you're looking at, if vol keeps going up, that amount of volatility will continue, that amount of premium you're going to take in will continue to go up as well. And eventually, you'll take in more premium doing this diagonal or calendar, if you were doing it the same strike price in another setup, than you would have by just by just using the vertical. Reason being is that with the vertical, you're locked in. You're locking in that premium for the entire time frame. And if volatility goes higher, there's nothing else you can do because you locked it in because you already sold it. Now, of course, you can get out of the trade and maybe do some different things, but the ability to continue to sell and have things expire is not going to be there on the vertical. But if you do a diagonal, let's say that the underlying expires just under the short strike, you have the ability to sell the same thing the next month or maybe a higher strike price. You have a lot of choices. And with that being said, the thing that I want to mention with this is that typically if you believe that vol is low, a lot of times you're better off just going with a diagonal or a calendar. If you believe that vol is high, then you're typically better off going with a vertical. Once again, every situation is different. Your stock sentiment can be a little bit different. It might match one or the other, but I'm giving you a general blanket rule as to how options can work, and hopefully this helps. And that is the strategy block for Siete de Mayo.
Is that also a holiday? Is that when I'm missing out? I know the 5th is a big day, but maybe the 7th, also. Perhaps. What do you do on the 7th?
Lucky 7.
I guess, yeah, you play some dice, right? That's what you do on the 7th. You roll, try to get snake eyes, and then you win. Free beverages of your choice. All right, it's time to keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Blocks, where we talk about what's popping off on our radar for tomorrow and indeed for the rest of the week. Speaking of the week, by the way, you got pretty much the rest of the week if you want to head on over to Add Options, play along, vote in our poll, our question of the week. Didn't have a chance to really get into your questions today, but we know VIX is in the mid-teens, but we're seeing a lot of people stroking their chins and eyeing that VIX space these days. I talked to a few of them down at OIC last week, so stay tuned for that on the old radar. Some of them have been around for a while, and so let's see if perhaps all this volatility of VIX is breathing new life in some old vol products who are all trying to elbow their way into the VIX spotlight. Which one do you think has the best chance of hitting it big with the traders out there? It could be our old friends VolX, a.k.a. the real vol, which is just the realized volatility of the S&P 500, or pick your index of choice. Could be Voldex, which is the at-the-money volatility of the S&P, so they clip the skew. Seems like with the issues with VIX these days, maybe there might be a crowd for that. I talked to NASDAQ about that. They own that now. They own that relationship at least. And it seemed like they're interested in perhaps getting that one dusted off and back out to you guys. There's also the newly announced, or I should say newly relaunched and re-announced Spikes, spelled better this time, which is just pretty much SPY VIX. Or, of course, you guys can say none of the above. There is only one VIX. There can be only one. Let us know at Options. Head on over there. Get your opinions. Vent your spleen, if you will, in the land of VIX. While we're doing that, Mr. Rock Lobster, vent your spleen for us, sir. What is on your mind for the rest of this week?
I don't know if a vented spleen would look very good. But it's radio, so nobody will know. All they would know is they would just hear the sound.
It would sound fantastic. That's what matters.
As far as VIX goes, I'm waiting for some more and better news on all of the good things that could be coming our way. We got, it's too early to talk about the midterm elections, but I think they're kind of in the back of everybody, at least Washington's head. But most of the earnings are out, and I'm not sure, Tosaw probably knows, but we pretty much have, we have, I think, record earnings in the S&P 500. The year-over-year earnings growth was pretty enormous. So until that stops, it's hard not to, jump on the Tosaw bull train, although I'm starting to look in places now that might be a little less long in the tooth, like a lot of the oil stocks that got kind of beaten up. And $70 oil, we just, all of a sudden it's $70 oil. I remember $40 oil, I think a year ago maybe. So having all that production offline for a couple of years could be a little bullish for, oil prices. I mean, historically, when things have dropped in the barrel, all that production comes offline or people stop exploring, and then all of a sudden everybody needs oil again. So it's not like we haven't seen that movie before. So I like oil plays. I like to see if there's any earnings growth or just some earnings coming back into these names, maybe even the shale, some of the more spec shale plays that might come back to life again. So that has my interest right now. And if we could see another 14 close for VIX, that means some other, let's say, just political considerations are starting to chill out a little bit. So those are the two things I'm looking at. Those are the things I'm looking at this week to see what happens with all that.
All right, Mr. Uncle Mike, sir, what is catching your eye the rest of this week?
Well, the two main things I think are the VIX level and the S&P level. Andrew's point about the VIX being below 15 again, I think is pretty significant from a technical standpoint, and the S&P being positive again, I think is very significant. So, looking at those two things, the bull train, so to speak. I guess my wife might have a different name for the bull train that I'm on, but that's another story. But I think there's a pretty good case to be long right now. But with it, like anything, folks, be careful and understand your risk and everything with which you do.
Words to live by, or perhaps more accurately, to not get blown out by listeners here as we wrap up the show here. Our first show back in the old studio, and first of many for a lot of fun stuff. Stay tuned to the network, as I mentioned. We got a lot of cool stuff heading your way. If you're not tired of my voice yet, that's good, because there's a lot of it coming at you. I sat down with just about everybody in the world of options. Our producers really worked me over the last week or so. They said, no breaks for you, no lunch for you, no nothing. You will speak to everyone at this conference. And so we did, or at least a nice smattering therein. Stay tuned to the network for all that good stuff. And speaking of good stuff, let's go around the horn one last time, see what they got cooking for you. That might be fun and or indeed good. Let's start with the Rock Lobster, sir. If I want to find maybe VIX or perhaps even this VXX thing and maybe have it be a little bit easier in my life, where should I go? What should I do?
I think you need to go to our website event, our VXX Made Easy free webinar this week on Thursday. Mark and I are doing it. And then if you think that is great and you don't want to be run over again like in January, you will look at our VXX Made Easy, teaching you how to trade the vol products, at least that vol product, the correct way.
There you go, VXX Made Easy. You just buy the puts and you set it and forget it, right? And you go away for like 6 months, and then you come back and then you buy more. All right, head over there, optionpit.com, to learn more. And Mr. Uncle Mike, if I'm interested in sampling those delicious gyros from Skippy's, or perhaps learning a thing or two about options, where should I go? What should I do, sir?
By all means, call me 312-212-3531 or send me an email at mtosaw@rcmfs.com. And if you become a new client and you come to my office, I'll buy you a euro. Along with that, I'll even give you a $100 gift card to the Option Pit as well.
Ooh, I might come to your office. Does that offer apply to existing co-hosts?
Ooh, I don't know. We'll have to see about that one. Why not? I'll buy you a euro.
I've been known to like a euro or two in my day. So that's it. I'm hanging up, and I'm heading out to St. Charles as we speak. Listeners, thanks for joining us, for sending in your questions, your comments. We'll get to most of them on Thursday. I know we have a little bit of a backlog we built up because we've been busy. We've been talking to a lot of folks. But hopefully you enjoy that. That's why you come to us, after all. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.